Hi there, I'm Mike Larson, and I'm here at the Money Show in Dallas, Texas. I'm here with Stephen Schork, the founder of the Schork Group. Stephen, thanks for your time. The last time we talked was a little bit sort of a macro view of where you see oil and natural gas and so on, those energy markets going. Given your view on where those markets are headed, where can investors profit, and sort of what would be your recommendations if you had to pick 2 or 3 right now that people should be looking into?
Well, certainly the infrastructure plays are clearly, it's kind of the Levi Strauss method of investing, not necessarily buying the gold, but buying the picks and the axes to sell to the miners. Okay. So when we look at infrastructure takeaway projects, for instance, the amount of investment in pipeline projects going into Mexico to ship natural gas to the Mexican market, ship natural gas to get it from the clogged markets in the Midwest into the Southwest, into the Texas markets for the export markets on LNG. So clearly what we have is too much oil, too much gas in where we're producing it, not enough takeaway capacity, pipelines to get to where it needs to be. So there's massive investments going on in those market areas.
Okay, is there maybe an ETF or an individual stock that you happen to like that you don't mind talking about?
Well, sure. The Schork Group is now introducing ETF products to look at the oil and gas infrastructure plays, the oil and gas supply-demand projects. We do a lot of quantitative algorithmic trading and analysis to identify entry, exit points for these markets.
Okay, now so that kind of infrastructure, great. That's a great idea there. What else sort of in the submarkets and energy looks attractive at this point?
Right now, clearly, I think with the markets trading where they are, with the oil prices here, NYMEX WTI in the low 50s, we know from a comparative advantage, from a cost of getting oil out of the ground, we're certainly in attractive levels. So even going out and trading ETFs based on the futures markets, right now, I think we are in an attractive level of markets where we're searching out a bottom. We're going into the peak demand season. We're coming out of the refinery turnaround season here in the fall. Demand both here in North America and in North Europe really begins to accelerate over the next 2 months.
One last question I guess I would have is, any of the energy users that look attractive to you, the companies that are buying inexpensive natural gas or oil that's not at 100 instead of 50, any plays there that are interesting?
Well, there seems to be a lot of pessimism in the market right now, and my argument back to that is Chevron and Occidental do not get into a $57 billion war to buy Anadarko if they didn't think there was tremendous upshot in the shale patch. Now, with that said, over the next 2 years, $137 billion of bonds come due in the oil and gas sector as they mature. Wall Street now wants to see the money, so what you're going to see is a lot of consolidation. So look for the large big boys out there who are going to be on a buying spree over the next 2 years as those maturities come due.
Okay, great. Thank you for that insight, Stephen. Is there any place where people can go, a website or something, where they can follow your work and get some more information about the markets?
Absolutely. We provide daily and weekly analysis on the futures and the ETF markets. You can be reached at contact@schorkgroup.com. That is Schork, SCHORK, group.com.
Well, thank you very much for your time, Stephen. Appreciate it.
Thank you.
Thank you all for watching.
Thank you. All righty. All right.
Yeah.
Appreciate the opportunity.
Pleasure.